Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today's September 13th, 2020. This is a weekend market review where we'll dive into many charts from a daily perspective and perhaps a couple of different perspectives, different time frames as well. So starting with the TNX, the 10-year US Treasury. So since February, we've been in this very tight range between about 50 basis points and roughly 90 basis points to the upside. And frankly, it's been even tighter between 50 and 75 basis points. And while I was under the impression that rates were going higher and starting to trend higher, and they were, what I'm noticing right now is a potential head and shoulders here setting up on the 10-year. And if that's the case, and certainly momentum is decelerating pretty fast, if that 50 level cannot hold, then I could see the 10-year Treasury heading back, potentially all the way back towards that 50 basis point level, which would be potentially a great buy and entry point. But we'll have to see. Bottom line is this: longer term, this looks like a bullish chart that ultimately can see the 10-year Treasury moving higher. But in the short term, I don't like what I'm seeing here on this particular chart. All right, copper. Copper obviously has been on the top of our radar for quite some time. The gains have been spectacular in a lot of these names. Hopefully, you guys have been investing in some of them. So we had this bullish flag breakout about a month ago, and then had another bullish flag breakout. Now we're consolidating here at the highs. What I like about all of this is first you had the breakout from momentum, and now you're consolidating through time, allowing for momentum to kind of reset itself. And to me, this is setting up for a higher high very, very soon. And all is very bullish in this regard. Right now, I am noticing that the MACDs are slightly curling into the negative, so perhaps a little bit more consolidation may be required before ultimate breakout. But copper is an area that you want to be invested in, have exposure to. All right, Dow Jones, Wilshire 2500 index. For those of you unfamiliar, these are the 2,500 largest names in the United States. And right now, there's a definite breakdown. You see, we had a breakdown in momentum right around here, and this was a good level to potentially, if you were long this trade, to exit the position. This is when the 5-day moving average crossed below the 10-day. So we are in a bearish short-term trend. The question is how far this trend goes, and ultimately nobody knows until it's done. But what we want to do is look at clues and see where it might find support. So first and foremost, I'm looking at momentum. So we tried to break out above the 50 RSI level, couldn't quite do it. So now what we have potentially, and I saw this on the 1-hour chart. I posted a chart on Twitter a couple of days ago of several indices, NASDAQ, S&P, small caps, and I believe there's one more, we're showing positive divergence. And I'm seeing this a little bit on the daily as well. It's hard to make out here, but bottom line is we just made a new lower low in price, but momentum did not make a lower low. So on its own, not sufficient enough evidence, but certainly a positive potential sign here that potentially we might have a rally on our hands. However, if we don't, this is the level I'd be looking at for support, kind of between at 7,600 and 7,700, which means we potentially have more downside to go, and which at the end of the day is very healthy. In terms of momentum, likely what we're going to be looking for is to see momentum find support here at that 30.1 level, 30.9 level rather, because this is the level that we rallied from back when we broke out from the lows back in late March. So that's the level. If we break lower, is where we'll likely be headed. Emerging markets. So emerging markets had a pretty good close on Friday, up 60 basis points, whereas the U.S. names were flat to negative. And again, this is the commodity story. I mean, emerging markets are heavily weighted in commodities. They were also negatively correlated with the U.S. dollar. So as the U.S. dollar goes down, emerging markets tend to do very well. And we know that the U.S. dollar is in a longer-term downtrend, though as we'll show you in a little bit, the US dollar is likely setting up for a continued rally, or certainly last I checked the weekly chart. But bottom line is emerging market chart here is back testing the 50. If it breaks higher, this could be a great setup entry point with a stop loss perhaps right below this level. So perhaps taking a look at the EM is an interesting play. All right, gold. Gold is, we'll be covering this a little bit more detail, both for public and premium subscribers. Public video, we'll just go through the ETFs, and the premium we'll do as we always do, pick about 30 names and dive through those charts. But bottom line is we're in consolidation between 1975 on the upper end and about 1900 on the lower end. And while I have a hunch that that we break down below 1900 and ultimately head towards this 1800 level, 1825. But ultimately, right now, it's still in undecided mode. MACDs are moving in a positive direction, which is a very good sign. But momentum is decelerating right now. It seems like lower highs and lower lows are being created, and we close the week on the daily just at 50. So if that breaks lower, I could see a sharp flush down all the way to 1900 and then potentially lower. So we'll have to see which way it goes. All right, so this is one of my most important charts that I look through, and this is the high yield index option adjusted spread. For those of you new to our videos, this is the spread between the yield on high yield bonds versus the spread on the yield versus the yield on higher quality government bonds. And the higher the spread between these two, the more likely there's going to be economic uncertainty and volatility. So the momentum in this index, so the higher it goes, the more bearish it is for equities. So the momentum was creating higher highs and higher lows for about since June, right? And it finally broke out above the 50 RSI level, and then it couldn't hold it right here. So we closed the day below the 50 level. So this is going to be interesting because this is the level that we broke down in this particular ratio back in I'd say late June. So is this going to be it, or is this going to break out and ultimately create more volatility? Time will tell, and I will be watching this very, very closely because it's a very good barometer on what's taking place underneath the surface. Housing index. So housing broke down here, but it seems like it's recovering, which is a good sign. And if that's the case, then perhaps the worst of this pullback is behind us and we move higher. And at the end of the day, this could be a bullish flag setup. So housing is setting up very interestingly to the upside. Crude oil. Crude oil also kind of double bottomed here on the daily with positive divergence. So that's a good sign as well. Our target on crude oil on a pullback was 34, and we basically hit it. The lows were about I think on the futures hit about 35. So bottom line is it's hard to tell here, but this may be it on the downside. It might bounce and make another low. That's certainly a possibility. But at the end of the day, I think that commodities and equity markets in general will be moving higher before the end of the year. NASDAQ. All right, so NASDAQ, again, created a lower low in price, but momentum did not create the lower low, and that's a positive sign, and that's what you want to see. Frankly, this is the level on the NASDAQ. If you kind of extend this over here, that's where we bottomed here, and that's where RSI is back to. And frankly, in terms of pricing support, this is a very interesting price support level as well. So to me, this is potentially a great buy and entry point for the NASDAQ. Now, if it breaks lower, obviously we throw that out. But right now, this could be a good risk reward with a stop loss slightly below this level, and then potentially where we start a new uptrend to the upside. Praying inflation, deflation ratio chart. So this one as well is an important chart, and this is what I track to see how inflation is doing. Obviously, it's been an upward trajectory, frankly, since since March of this year, earlier actually, if you look on the weekly. But it's struggling right now, and we'll have to see which way it goes. Obviously, there's a lot of weight towards energy here. So if energy continues to show weakness, then this can potentially turn lower. But right now it's consolidating, and we'll see if this breaks lower or higher in the next couple of days, if not weeks. All right, next is the ratio between the consumer discretionary and the consumer staples. These are equal weighted, so it doesn't have the impact of Amazon. And bottom line is there's been a pullback, but to me this looks like a bullish flag, and a very, very healthy bullish flag that ultimately resolves to the upside. However, if this RSI breaks below 50, then potentially that changes the narrative. But for the time being, I'm cautiously bullish on equities based on what I'm seeing. Regional banks, and these are very closely tied to the 10-year Treasury spread interest rates. So they've pulled back alongside those interest rates, but they're finding support around this level, approximately this level in RSI where we found support before. So if that level holds, then I think that this could be a good buy and entry point again. And frankly, if you look at this chart, it basically it's almost like a 1-to-1 correlation with interest rates. This was the kind of that spike in interest rates, pulled back, you tried to rally, and so on. So we'll see if interest rates break lower, then this index will break down. If interest rates break higher, this can be a great option play for kind of boring stocks to produce very interesting returns. All right, S&P 500. All right, so let's see what this one's showing. So we had this narrowing wedge, bearish wedge. We broke down, fake breakdown, breakout rather, and so this uptrend has been broken. And you had the crossover, the 5 to the 10 day moving average. The question is, where is support? And so this is the chart. This is the line that I'm looking at, this 38 level, which is where we broke out from back in March, similar to many of the other charts. So in terms of price support, I'm looking at 3250 to about just under 3300 for very solid support on the S&P. So we're basically close to there. We might have one more flush down, maybe not, but to me this looks like a very solid support zone. If that breaks, then I think that 300 level is the next target, but I sincerely doubt we get there. Semiconductors also breaking down, but showing some positive divergence here on these two lows. So if it breaks lower, then I think we're looking at another 100-point drop in this index, but this could be it. Small caps were kind of foreshadowing. So even as the semiconductors were moving up, small caps were starting to decelerate here, and that was a first sign that perhaps this trend was ending. And so the question is, how much lower does this trend have to go? And so first and foremost, I look at, just as I have been doing, where is that support level on RSI? Very, very close to it. So that's a positive. Then I look for price levels of support. You've got some resistance levels here. You had support here, and you broke out of that support. Now that's going to serve as support here, and we'll see. We'll see if these levels hold, but I think they will. And this potentially is a very good buy and entry point for the small caps. Dow Transports, to me, they're the strongest indicator that we are going to move higher in the markets. They're consolidating. They're showing a lot of strength at basically 52-week highs. And to me, that they're setting up for a new breakout here. And that would bode very, very well for the general equity markets. All right, the USD. So the USD is often very, very inversely correlated to precious metals. So obviously, we have a ton of precious metal investments in our core portfolio. We've been following this. You guys, as our subscribers, have been asking us to follow precious metals, probably the most watched videos outside of the uranium sector. So there's obviously a lot of interest in them. going back historically, I've looked at a lot of different eras back since the 1950s, and I tried to find out how what's the ratio like between the U.S. dollar and precious metals. And so the common conception, common wisdom is that when the U.S. dollar goes down, precious metals go up, and vice versa. It's not always the case. You had 5-10 years of time where the U.S. dollar would go up and precious metals would go up. So don't want to say necessarily that the fact that I'm about to show you that the dollar is bottoming and likely is going to break out and is going to rally at least towards this 95.5 to 97 level. I'm not suggesting necessarily that means that precious metals are guaranteed to drop, but it's going to be a headwind. And if that's the case, then you have to just remain cautious. But when you look at this chart, exceptionally bullish right now on the US dollar. I think this is moving higher, and the breakout is imminent. Volatility. So we had vol broke out of this downtrend, broke out back in August, and that was a great opportunity to potentially hedge the equity exposure by buying vol. Broke out, but this was a shooting star here, and basically have pulled back, have been sold, and we're back at the 50 level, so it's going to be very interesting to see. But if that breaks lower, then I think that, like I said, the equity correction, it might be coming to an end. MACDs are moving lower, so we'll see what happens. And here's the last chart, Wilshire 5000. Again, double bottom with positive divergence. If it breaks lower, I think we're very, very close to the bottom. All right, so let's very quickly take a look at our ETF watch list. Just to, oops, not there. I want to see kind of which sectors have the best momentum right now and which have the lowest. We're not going to go through the charts in this particular review because I've got another 2 to 3 hours of videos to make, and it's already late here. It's Saturday night. But bottom line is, I did want to just give you guys a sense of the momentum of the markets. All right, so solar, incredibly hot, the highest momentum gauge, clean energy, silver, copper, home construction still here, lithium. So these are the trends. Internet, global stocks, global auto. This is interesting. We might want to take a look at that. Auto ETF seems to be doing well. China consumer, small cap discretionary. That's a very interesting trend that I'm noticing. Again, the Dow transports here. So a lot of clean tech and technology, and then for some reason, transports and cars. So that's interesting. In terms of those on the bottom of the momentum gauge, we've got oil, natural gas. They've been the usual suspects here, and so one day this can be a great trend. Until then, definitely not. More, and so I'm seeing a couple of EMs here, but primarily energy. So again, we'll have to keep a very close eye on this, because once this trend reverses, there's going to be a potentially great opportunity to buy, but it's just not there yet. So we'll leave it at that. Anyway, guys, thanks for watching. Thank you for all your support. We crossed the 5,000 mark on Twitter, and it's thanks to you retweeting my videos and saying really positive reviews and giving me the positive feedback to give me more energy to continue doing these videos for y'all. So best of luck, and wishing you a wonderful week. Stay safe.